All right, welcome everybody. This is the weekend video. This is Enda here from bullwaves.org, obviously. And let's just get into it. Okay, so we'll start with the currencies and then we'll move the dollar crosses and then we'll move over. Okay, so the main thrust of the count that I'm working with in Eurodollar is this large triangle here. That's been going on for a year and a day, or God knows how long, years now. And I'm expecting a decline into a D wave. So if we're topping out in wave C, then I'm expecting a decline into a D wave. This is the daily chart here. The main alternative on the daily chart is that we are actually heading higher in 5 waves to create a larger wave C of a flat. We'll see how it goes. 4-hour chart, not much to say here other than the fact that we've got the main reason I'm going for the triangle right now and not the larger flat is because this internal triangle here, and the best way to count that is a B wave, and that would not work within the other interpretation. Okay, so wave A up, wave B triangle, and then wave C up, an extended C wave. Okay, so this is the hourly chart. If we have topped out, we've gone through a series of kind of rolling tops over the last couple of weeks. I think the best way of interpreting this now is a triangle, and we topped out at a new high, only just at 120.10, and now we're moving impulsively lower. There's a few ways that you can count wave A down. If this is wave A of the larger wave D, so wave A blue of wave D in red there, and wave A blue should at least be 3 waves down. So I've marked an A, B, C down for wave A in blue. And wave A, green of wave A blue, should at least be 3 waves. So we're getting more complicated here. So this could be wave A of A of A. We can also allow for 5 waves down in wave A in green, but we'll have to just see how it unfolds over the next few days. So far, so good. It seems that we've got either a wave 1 and 2 and 3 complete. Could be correcting in wave 4 now, and expecting another drop into wave 5 to complete wave A. This could also be B wave underway, so we could have wave A done and wave B underway. We'll just have to, again, it's just a wait and see. There's no way of knowing what pattern of correction is going to take, so we'll just have to leave all avenues open at the moment and see how it unfolds over the next few days. Okay, so let's get on to cable. Again, topping in a triangle, wave C of a triangle, and we should be heading lower into wave D. I've been expecting this for a while, and the same scenario stands for cable here as well, because we've had to just this flat left shoulder here that's happened over the last while. So we've had a kind of a series of rolling tops, so kind of false summits, let's say. And we are probably moving lower now, maybe into wave D. Again, that's just the ever-present reality that a correction holds, is that it's just incredibly hard to call. If this is a triangle, well, then we should continue to experience kind of range contraction in wave D and E. So we should, over the next couple of months, create a lower high again in wave E to complete wave 4, and then we'd head lower again in wave 5. It is interesting that we have hit that previous B wave high. Well, more or less. That comes in at 135, so we should head lower again, and I'm expecting about 120, and that's where this internal B wave, the lower extent of that internal B wave happened back in May. So wave D should head lower in 3 waves down to about 120. The hourly chart. Here's how I was counting, or have been counting, the this rolling high. series of wave 3 tops and wave 4 corrections, wave 3 top, wave 4 correction, and then wave 5. The decline off wave 5, it's not impulsive. I mean, it's not in 5 waves, so it's not impulsive yet, but it does count pretty well as an A wave down. So we could be expecting wave A, B, and C down in A again, and we'll just see how that develops next week. The larger count calls for wave D of a triangle. So you see the top of wave C here, and wave D should head lower in 3 waves. So I think if we break the lower extent of this left shoulder here at about 129.80, that should be enough to confirm wave D underway. Okay, so let's get into dollar yen. There's a couple of scenarios in dollar yen that I'm working with. We just haven't seen that acceleration higher that I've been expecting, and I do have to allow for the possibility that this C wave here is not complete yet. And the way that would work, you can see the alternate count here circled in red. And the way that this larger C wave would work is if we have a wave 1 down, wave 2 up, an extended wave 3, and then all of this here over the last month has been a triangle. So it could be a triangle 4th wave, off a 3rd wave low, triangle 4th wave, and then one more low in wave 5. I think if we break, definitely if we break 105.10, that'll be triggered. But I think if we get below this interim low this week at 105.58, that'll probably be enough to shift in favor of that alternate count. But let's see how it works out. We could still see an acceleration higher, but it's kind of teetering on the edge. We'll just see how that plays out next week. Okay, so this is the Dow. This large B wave top is or has been the bane of my life for months now. But I'm still working with that idea of a B wave. We had a pretty solid rejection yesterday of the all-time high, so let's see. It could be developing something to begin wave C down now at this point. Okay, the hourly chart, you can see we're tracking this 5-wave pattern up in wave C, so that'd be 5 waves up in wave C green. And this week we're tracking 5 waves up in wave 5 of wave C, and we had this trend channel working. The price rallied in wave 1, 2, 3, running flat wave 4 up to the upper bounds of the trend line, and then a solid sell yesterday. We could be creating a lower high this morning. The pre-market is probably just about started over in the US, but it's still too early to call. I just can't. The absolute bearishness has been knocked out of me over the last couple of months. So I have underestimated the willingness and ability of people to speculate to ever greater degrees, and that has been my mistake. So I'll just have to wait for confirmation before turning fully bearish into wave C. Now it's a large degree wave C, and this large degree wave C should carry us a long, long way down, possibly down towards. You could see this trumpet pattern here on the daily chart, possibly down towards that 15,000 level. So that's a long way down. The minimum target would be around that wave A low, so about the 18,000. Let's see how that goes. Yesterday was a good start. The short-term pattern looks filled, it looks complete, and that surely is lining up to be an impulsive looking decline. So if we can build a larger 5 waves down that starts to break these shoulders here, these left shoulders of support here. So we've got 27,450, we've got 25,960. So let's say 26,000, and then the previous B wave here of 25,420. So it's a long way down to get confirmation, but if we do get 5 waves down, that breaks an initial level of support, so that below 27,450, and then a corrective lower high. So 5 down, corrective lower high to build a right shoulder. Then we can get pretty excited about what's going to happen in a possible C wave down. Okay, let's move on. Let's get our charts out here. Gold. It's pretty evident that we've had a range contraction over the last few days, or a few weeks, excuse me. I'm still leaning in favor of one more decline in 5 waves to complete 3 waves down in wave 4 before rallying again in wave 5. But I cannot discount the possibility of a triangle in wave 4. So this could also be, wave 4 triangle. But we do have pretty straightforward way of knowing whether this this alternate triangle wave 4 is actually what's happening. So let's get down into the hourly chart. Here you can see that narrowing range. If you were going to count it as an A, B, C, D, E, this would be the E wave low of wave 4. So as I've been counting that as wave A of wave 4, but you could also call it, if it's a triangle, it would be the larger degree wave 4, no doubt about it. So if this is a wave 4 low, then the initial signal that we are moving up into a fifth wave rally would be a break of 1990 again in 5 waves. So if we rally, we break 1990, especially, let's put the other line in there, 2014. So you could call it 2020. If we break up, push up to 2020 and then correct again off that, so that'll be a 1-2 pattern to the upside. That will signal a possible turning up to begin a large fifth wave. So right now, I'm still favoring the possibility of 5 waves down in a C wave to complete either wave A or wave 4. So it's kind of one or the other. But there is this kind of looming, or it's a pretty evident range contraction. So it's a possibility that we have a triangle going on here also. The reason why I'm not switching to that just yet is because we have a pretty reasonable 5 wave move lower. So if we have 5 waves down and we get 3 waves up, well then we're probably going to reach lower again into a C wave in 5 waves, and I would suggest that we're going to break 1800 at least in that C wave down, possibly down as far as 1750 or something, before we can start looking for a rally again. So for the moment, I'm still sticking with this 3 waves, A, B, and a large C wave down, with the possibility that, well, there's a couple of alternates there that we can look to if we see any sort of bullish action off these lows. If we get a break of 1900 again, that will signal the wave C is underway. Okay. Crude oil starting to turn. I just have this feeling that previously, back in 2018 and again earlier this year, we had a turn in crude, or sorry, that was late last year, late 19. We had a turn in crude before we had a turn in the stock market. We had a turn in the dollar before we had a turn in the stock market. So I'm getting the kind of sense that we are going to see a turn, or we have seen, or we are experiencing a turn in crude and a turn in the dollar at the same time before we get a large scale decline in the stock market. So I would watch out for that if I was a crude bull right now. Okay, so it's the hourly chart. I am looking at a couple of ways of interpreting this action. Looks like we've got 3 waves up today, so I've moved this count, the recent decline, up 1 level here. So into this week's low at about whatever that was, 40.40. That's possibly 5 waves in wave 3. So expecting a 4th wave and then a 5th wave. We have 3 waves up. Let's see if we can push back down again to break that 40.40 low in wave 3. And if we can, we'll have 5 waves down and we'll look for 3 waves up at a larger degree. So we're looking for this larger degree 1-2 pattern. We've broken the initial B wave. We have a larger 4th wave, a corrective low here at 38.80. So I think that level will provide the largest signal. If we break that level and we get a corrective lower high, then we are on for a large degree decline again in crude oil. But it looks like we have a couple of more days before anything like that happens. Okay. Going on to the S&P and the rest of the markets. Here's the S&P 4-hour. Again, topping in what I'm viewing as a B wave. You can also view this as a 5th wave high. There's a possibility of that. I haven't discounted it, and maybe it's more fitting. I don't know. For the moment, the B wave high is standing, and I would expect at least a C wave decline. If it's something larger, if it's a larger degree impulse wave or impulsive pattern that we're going to see develop, well, then maybe this high here takes the 5th wave high. For the moment, I'm going to stick with this, expecting a C wave down. You can see all the way through this rally to a new all-time high, as I've been pointing out again and again and again. It's been on. The price has come at a cost of slower momentum, narrow leadership, very low participation, internal divergences, everything that you could point at to show an unhealthy market has been happening over the last few months. So yesterday's move was no surprise really, but what we had yesterday was nowhere near what we had even in June. So we've only probably traced out half of what we declined in June. So I do want to see a much larger decline begin to signal that we've turned more conclusively. The decline. Well, I can't scoff at what happened, but again, I do need to see a larger impulsive decline, and I need to see a break of support before that happens. So we have the lower extents of the first B wave here. So this is wave B in gray. So we had a running flat wave B, so A, B, and C. If we break that 33.20 level, or you call it 33.25 at wave A, that'd be a good sign. The higher degree, again, 4th wave at 32.05, we break that, and we have 5 waves down. I think then you could just jump on the bandwagon. That wave C down is beginning. But you do want to see a break of support and a corrective lower high before getting too excited. Okay, so if we have a 1-2 pattern tracing out or complete, the pre-market over in the US is selling right now, so we have another spike down. But we don't know whether that's only part of a B wave. I mean, that could be an A, B, C pattern that's about to trace out a larger second wave. So we'll just have to leave that possibility open. I'd be quite happy if we created that lower high today, and maybe we saw the initial sell-off to begin a 3rd wave down. So let's get that wave 3 in here. Okay, wave 3 should, at a minimum, match what we had in wave 1. So yeah, a push towards 33, a break at 3300. If we pushed out, if wave 3 extended and we got a 162% extension of wave 1, that would bring us down to about 3230 or so. So we have latitude there where this wave 3 can extend. But in general, 5 waves down to complete a larger first wave pattern lower. Okay, I'm hopeful, but I'm not throwing my chips on the table just yet, given the way that this market participants have conducted themselves of late. I'm just more cautious now, I suppose, than I was earlier on. So you can say that I'm learning. I do like the way the pattern has filled out quite nicely into this week's high. So we were counting this as running flat and 5 waves up in wave 5 of C. So I like the fact that we have a 5, 3, and 5 pattern complete, and we've declined pretty sharply off that level. I was talking about the initial move down off the top would be pretty rapid. So at this moment in time, I'm counting this as the initial move of the initial move. So the first leg down of the initial first wave that I'm looking for. So large 5 waves down is what I want to see, and then a corrective lower high. So we have time to build that over the next week or two. Okay, let's move on. Silver. Still the possibility that we're going to see a larger second wave in silver. We haven't retraced enough. Well, we've retraced 38% of the previous rally in wave 1 up. So 38% is better than nothing. But a second wave, I would like to see retrace more than that, and we haven't done that yet. So if this is wave 2, then I would like to see a push down towards that $20 mark again. So that's where we have some pretty significant support, the previous fourth wave and this internal correction here within wave 1 up. So that $20 handle, it seems attractive for wave 2, and at the moment it looks like we have the beginning of wave C of 2 now underway. So let's see how that is tracing or unfolding in the short-term chart. Here you can see wave A down, wave B up, and the beginning of wave C down. The pattern right now, I'm just going to pull this apart a little bit. That actually should be 1 degree higher, but for the moment it'll stand. The decline off the high is a little bit choppy. That is one concern that I'm having right now. But the rally up off the wave A low, so that rally into the $28 high again, is not impulsive. It just does not have the it doesn't have the clear 5 waves that you would expect in a first wave up. It does fit a 3-wave pattern better. So we have 3 waves up in wave A. Even the fact here that we've got this overlapping within the middle there, that's screaming a B wave there. So we've got A up, triangle B wave, and then wave C up in A, and A, B, C, D, E, triangle B wave, and then this move here, even in wave C, counts better as 3 waves. So it's it's combination wave that we have here in wave B. So an A, B, C up in wave B. It is possible to count 5 waves down here, but again, it's a little bit convoluted. So we'll just have to wait and see how this this move unfolds. I'm looking for a corrective lower high and then acceleration lower into a third wave. And if we break this B wave low here, so we've got 26. If we break the 26 handle, that'll confirm that we have wave C underway. I'm going to redo this chart in a while, but we'll move on from that now. Suffice to say, if we that 2880 high has to hold, and let's look for a break of 26 in wave 3 down. Okay, Bitcoin, that took a serious spill. I was looking for a fourth wave correction to unfold. It looks like we've got wave C of 4 pretty much done now, and there is the chance that we get a rally into a fifth wave. I like the way this pattern has unfolded at the moment. It looks like a 335 flat correction, and if you get an impulsive move again up higher to create a higher, bullish higher low off this low, well, then it would probably indicate that we are moving higher into a fifth wave. Here you can see that wave 3 high, ABC down in A, ABC up in B, and then 1, 2, possibly only wave 3 done here, and maybe wave 4 of C now underway, or wave 4 complete. So there's wave 1, 2, 3, 4, and then one more move lower in wave 5. At that point, then we'd probably look for something to develop to the upside in wave 5. So if we see a push below 10,000 again, that's 990. What was that? 990. Sorry, 9980 at the low there. Try and catch that low. 9986 at the low. It's 3 waves up so far, so I would suggest that we're going to see another push lower again. And if early next week, if we see a 5-wave rally off some sort of low, that will indicate that we have a 4th wave complete and that we are probably beginning a rally in a 5th wave. So the only way to, I'd say, well, the first indication that this large 5th wave has begun is a break of 11,100. So that's a long way up, I know, but Bitcoin moves like a thief in the night, doesn't it? Anyway, let's see if we can get a 4th wave bottom and the beginning of a 5th wave up. Long term, that doesn't mean that I'm any sort of a bull on Bitcoin. I was speaking before about the fact that this could be some sort of truncated C wave. If that's a C wave top there, this could be a truncated C wave, and maybe we're beginning a large degree C wave down again. So I would keep that in mind if I were you too. That C wave can truncate and it can head lower. So if we do see a break of this previous 4th wave low here, that 890 level, I would get pretty worried for Bitcoin in the longer term. For the moment, this count here does stand. We've got an A wave up, B wave down, and an ongoing C wave with a minimum target of 13,800. But you would have to watch for this 4th wave low here around that 890 level. Okay, let's move on to Footsie. Footsie has been given a bearish, let's say, counter signal to what's been happening in the US over the last few weeks. We've got continual lower highs and corrective rallies. So there is a very large chance that we are beginning to see a large degree sell-off in Footsie into a 5th wave down. On the hourly chart, yesterday was a pretty nice spike lower. Today we had a 3-wave rally up to the this morning's high, and we're selling again. So if this is a series of 1-2, 1-2 rallies, or sorry, 1-2 moves to the downside, then we should expect some serious fireworks in the UK market over the next few weeks. I am tracking a possible 3rd wave down, and If that's the case, then it's a third wave in green here. Then we should push probably rapidly lower over the next few weeks. For the moment, we have broken this B wave support. The next level of support comes in at this larger B wave here back in May. So we have 56.55. A break of 56.55 will again just add to the bearish picture. And that probably will confirm a third wave down as underway. Okay, Germany, we may have the completion of an ending diagonal on the cards right now. Yesterday was again a sharp move lower, and we've got a corrective lower high already in place in Germany, and they're an hour ahead of us. So it's 2 o'clock in Germany over right now. So they've corrected higher and again spiking lower. How you arrange this internal 5 waves up, it's probably up to you. We have some significant levels of support. We have wave 2 here at 12,620. The initial wave 4 here at 12,840. And the most important level is this previous wave 4 here at 12,200. If we get 5 waves down in a break of 12,200, then I think Germany is toast. The DAX is toast. And we're probably confirming wave C down underway at that point. Okay. The Nasdaq, we have been tracking this ending diagonal 5th wave over the last few weeks. Interestingly enough, how the market rallied up to that upper trend line and has capitulated over the last couple of days. Nasdaq turned first actually this week. We had a spike lower early in the week to a lower high, and then a significant spill lower yesterday. So we the most likely count that I'm working right now is this impulsive move lower in wave 1. You can see how the market broke 2 trend channels, popped above them, and then headed straight down again. And interestingly, also, you can see that the high came in just at about the 162% extension of wave A. So we have wave A up here, wave B down, and then a 5-wave extended rally in wave C. Wave C reached 162% of wave A and created a lower high, and then accelerated lower in a third wave. So we've got possible 1, 2, 3, 4, and wave 5 underway right now. Don't know how far wave 5 will extend to. If it breaks the wave A high at 11,290, that'd be great. That would suggest another 5-wave move, about 400 more points to break that 290 level, and at that point, you'd probably look for early next week. I'd look for a corrective lower high, and that will give us a bearish impulse wave to begin a new bear market. So again, the Nasdaq, the daily count, see how we went to an insane new high. The daily count traces out 5 waves up to complete wave 5, all-time high, and the bear market, again, it should trace out 3 waves. We should most likely head back towards, over the long term, we should head back towards the 2009 lows. So we'll just, that's a long way down. We'll see how we get there, but it should be probably in 3 waves. Okay. Well, I'm going to do Hong Kong as well. So it's here sitting, staring at me. I haven't labeled the Hong Kong chart because I'm still trying to figure it out, to be honest. We had off the March lows, we had this 3-wave rally. This decline off the high here hasn't. If I stretched my willingness to accept certain things, I could probably push this into a 5-wave form, but it doesn't fit it correctly. The thing that's really glaringly obvious is the fact that we had 3 waves up and the beginning of a sell-off. 3 waves up again, and a pretty significant move lower again. On the hourly chart, you can see the 3-wave move higher that topped out this week or late last week was right up to the 62% retracement level, and then significant decline. This could still be marked an ABC decline, but we could easily accelerate lower. And if we break that early August low of 24,160 again, then we are looking pretty solidly at a possible third wave decline. So that could be wave 1, 2, and the beginning of a third wave down. Okay, that does it. Just about where my throat is about to shut off and go dry completely. Thanks for hanging on with me. Thanks for watching the video. Thanks for checking in every night and reading the nightly updates on the website. Have a great weekend, everybody. God bless you all and keep you. And we will see you again on Monday night on the website. Okay, bye-bye.